Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really pretty interesting time in the US after the recent set of data. You got third quarter GDP that was revised up to 3.8 from 3.3. So that indicates, a pretty strong and robust US economy, which is maybe a little bit at sort of odds with the recent unemployment data. Then you've got the PCE, which is the Fed's preferred inflation gauge, and that is sort of holding steady at around 2.9. The headline figure was just up a tenth, but to say core running at 2.9, which again is well above that 2% target range for the Fed. So after the recent quarter point cut, there was further talk about potentially a further cut in November and then maybe one more in December. But on that sort of data with the on the growth side, the U.S. economy potentially doesn't need any further stimulus. Now that's obviously in direct conflict with Trump's agenda of lower rates. On the back of that data, the rates have sort of nudged up just a touch. The 10-year is 414, the 30-year is 464, and the 2-year is 361. So now really all eyes turn to the next sort of employment data coming out, because if that shows a sort of increase of around sort of 100 to 110,000, then potentially the Fed doesn't need to cut interest rates again at its next meeting. Now Trump has come out as well with further potential tariffs on drugs. If they're not made in the US, he's looking at 100% tariff on drug prices, which again will be inflationary. And indeed, the work coming out now from the major sort of investment banks and sort of economists is pointing to the fact that, the reason why inflation is just nudging up a touch is that the tariffs are starting to have an impact on prices now. Now, again, that's in direct conflict with Trump and his administration on what they say. Now, still no end in sight for the Ukraine-Russia war. Putin is continuing to sort of bomb pretty much on a daily basis. But potentially there is certainly a lot of work taking place to try and get a resolution to the Gaza issue. Trump and Netanyahu have come up with a proposal now, and it's just a question of whether Hamas accepts that. But there does appear to be some pressure coming from the Arab countries for Hamas to accept these peace proposals. But obviously, it's pretty complex, and potentially there have been deals in place before, and they've always run into issues at the sort of 11th hour. Now, interestingly, oil's backed up just a little bit, 62.40 and change. Now, the UK really facing some pretty tough times as we head into sort of the budget. The economy certainly needs a boost and needs lower rates, but the issue is that we're starting to see inflation is starting to nudge up in the last couple of reads. Now in the EU regions, we started to head into those winter months. It's just going to be interesting to see how the economy sort of holds up. Obviously, there's still a lot of nervousness over Ukraine, Russia. But also as well, obviously, energy costs over the winter months. Although certainly the EU countries have done a lot to reduce their reliance on Russian gas over the last couple of years. Now in Australia, the RBA left the cash rate unchanged at 3.6, which maybe was a little bit of a surprise because, again, the economy there, it's doing sort of okay-ish, but unemployment has started to sort of rise just a little bit. And, there was some talk that potentially we could see a further rate cut. So now all eyes turn to the next meeting when, they are looking for a further rate cut, certainly before year end. Now here in New Zealand, the new governor of the Reserve Bank has been announced, Swedish lady Anna Bremen. But she doesn't take over until December, by which time we will have had two further meetings, and potentially rates could be 75 basis points lower. Because certainly now the meeting in October, there's increased talk after that very weak GDP data that there'll be a 50 basis point cut. Now if that is the case, the OCR will then fall to 2.5. And then potentially there's still further talk about a further cut in November that will take the OCR down to 2.25. Now obviously if the OCR is cut by 50 basis points, that's obviously good news for mortgage holders as rates will fall, but then obviously not so much good news for savers as term deposit rates will be falling as well. But on the positive side from the New Zealand economy, a big payout from Fonterra, and really it's almost like a sort of a two-tier economy here. You've got horticulture and dairy sector that's doing very well, but the rest of the economy really is struggling. So Fonterra's cash payout this year is going to be just over $16 billion into the economy. Which traditionally has seen quite a big sort of boost to domestic spending. And indeed, the initial sort of guides for a Fonterra payout for the 2025-26 season is still got a mid-price of around $10. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.